Investors often choose ESG or environmental social governance ETFs to align their portfolios with their values. MSCI is a major index provider that offers several ESG-focused indexes for ETFs. Now we remember that an index is a list of companies or a framework that an ETF provider can use to turn into an ETF to be able to trade on the open market. And so this is going to be quite important as we're going to go through some ETF types provided by MSCI, which are commonly traded in the US as well as in Europe. And Australians, however, can have access to them as well, as we have seen within the ETF portfolio and the ETF research video that we've provided, where we have explained that through the interactive brokers platform, we can invest in all ETFs, even in other markets, potentially. So that's why we're going to show you some ETF options and investing types in Europe, as well as on the Australian Stock Exchange, so that it makes it easier for the Australian investors to invest into them if they want to, but they can, however, also invest into the European ones that we're going to present in this video as well. Now, 3 common MSCI-based ESG ETF types are the ESG-Screened, the ESG-Enhanced, and the SRI, or Socially Responsible Investing. Each of these ETFs start from a broad market index, but exclude companies that don't meet certain ESG criteria. And we'll explain in simple terms what each ETF excludes and how they differ using charts, tables, and icons, making it easy for you to follow. Now, an ESG ETF basically tracks that index, filters out companies with poor ESG practices. So broadly speaking, the MSCI ESG-Screened index is the most basic version, which removes obvious offenders. The ESG-Enhanced index goes a bit further by optimizing for high ESG scores and lower carbon footprint, while the MSCI SRI index is the strictest and only includes companies meeting high ESG standards and excludes many controversial activities beyond those in the screened or enhanced one. And we'll break down each and one of them now. Now, the MSCI ESG-Screened indexes start with a parent index like the MSCI World Index or the MSCI Emerging Market Index, as we've explained before, and then exclude companies in several key categories. Now, in plain language, it basically throws out any company involved with controversial weapons, nuclear weapons, or civilian firearms. If it produces tobacco, if it uses major fossil fuel activities, if it, for example, is involved in oil and gas extraction, thermal coal power plants, or Arctic drilling, or if it has anything to do with palm oil as well. In other words, if a company is, say, a cigarette maker or a warhead parts supplier, it won't be in the ESG-Screened index. In addition to that, the screened index excludes companies with a very poor ESG controversies score, or if it violates the UN Global Compact principles. So practically, it removes companies with a red flag controversy score or serious environmental social incident scores. And then finally, the ESG-Screened index reduces carbon footprint. So after applying the above exclusions, the MSCI looks at the remaining companies' greenhouse gas emissions intensity. And if the result isn't at least 30% lower than that of the parent index, MSCI will drop some of the highest polluting stocks until that 30% reduction is reached. Then there's the MSCI ESG-Enhanced ETF. That's the second one we'll discuss. And basically, it also starts from a broad market index as before, and then excludes, however, a wider range of companies. As you will also see in the table that is below this video at the bottom of the course page for this section of the course, which I really recommend you all to have a look at. So basically, this ETF excludes controversial weapons, nuclear weapons or civilian firearms. Now this one also excludes conventional weapons. The MSCI ESG-Screened index does not actively exclude conventional weapons. So this is also something to consider from your moral standpoint. Do you morally agree with that or not? That's something that you would have to decide for yourself based on your own values. This ETF also excludes tobacco, thermal coal mining and coal power, oil sands, as well as controversies to do with the UN Global Compact if they have serious governance issues, for example, or have several severe ESG controversies. Now, next up, the socially responsible investing indexes from MSCI are the strictest. They use value-based screens that cut out many industries, plus require top ESG ratings. So in simple terms, the SRI index excludes any company involved in a wide range of controversial activities. These include, for example, weapons, both controversial weapons and conventional weapons. They exclude firearms, tobacco, alcohol, adult entertainment and gambling. Companies with meaningful revenue from pornography or gambling are excluded. Genetically modified organisms, energy like coal or fossil fuels as well. On top of these exclusions, the SRI index requires all companies to have a strong ESG credentials. So that means that they have to be on third-party sites like the MSCI ESG ratings. It must have a score of at least A, which is quite high already because CCC is the lowest and AAA is the highest. So it has to already score very well, which is basically a compound rating agency that looks at a vast range of environmental, social, and governance criteria to look at how these companies are performing in terms of their sustainability practices. This is something we'll also cover in the next part of the course. Then companies must also have good controversy scores, basically no serious ESG scandals. After basically filtering out by industry in the ESG rating, the SRI index typically only include the top 25% by market cap in each sector. So there's a lot of screening out happening here. So it really helps to look at these ETFs side by side, to look at what they exclude differentially from one another, to make the best informed decision in terms of which ETF is best for you. Because maybe you don't want to exclude conventional weapons because you think it's important for a country to be able to defend itself. Maybe you don't want to exclude alcohol because you love alcohol and you love alcohol production companies and want to support that. Maybe you want to include nuclear power because you think nuclear power is very important for your country. And so there's different criteria that you kind of can look at from your own moral standpoint and make the decision on what you actually support and what you want your money to be invested in. And just to loop back in with the SRI index that we've just explained, the SRI index is therefore different to the other two we've explained because the SRI index also considers this ESG third-party rating, which the other types have not included, but therefore it does not include, say, a formal target to reduce the carbon intensity. So just to reiterate for those European or US ETFs, basically the screened ETF removes the most obvious no-no companies, and it still invests broadly but simply filters out tobacco, weapons, high polluting firms. The ESG-Enhanced ETF does the same thing but filters out a little bit more and reweights in favor of more socially responsible companies, and therefore excluding more companies than the ESG-Screened ETF. The SRI index is the strictest and excludes basically most things that can be excluded that are controversial, as well as applying that ESG rating in contrast to the ESG-Screened and ESG-Enhanced ETF. Now in this section of the video, we'll be discussing Australian ETF types that exclude certain industries. And so the first one that we will discuss is the ETHI ETF. Now this one tracks a climate leaders index and first selects firms with top carbon efficiency scores, and then excludes companies with direct or significant exposure to fossil fuels. Now we have created a second spreadsheet to also explain this in much more detail, and you'll be able to find detailed information on the individual exclusions from Australian ETFs that will be traded on the Australian Stock Exchange. Now, the ETHI exclusions explicitly cover fossil fuels and a broad list of other industries that are considered controversial areas, such as gambling, tobacco, armaments, nuclear energy, even environmental destruction of heritage-listed areas when there's controversial activity that have been reported. Also, if there's animal cruelty happening, alcohol, business involvement, junk food, pornography, human rights abuses, and even a lack of board diversity or payday lending. So really a very broad suite, and from all the ETFs that we have seen, this one has the most exclusions that we have considered here, and we've basically within our list included the ETFs that have the highest market capitalization, which means that there's the highest amount of money invested into these ETFs on the Australian Stock Exchange. We have taken like the top 5 or 6 or so and basically looked at every single one of them and exactly what they exclude to make it really easy for you to not have to do the research yourself. However, if you do want to learn more about what the individual criteria are in more detail, for instance, what exact percentage of business involvement counts as an excluding criteria, then I would definitely recommend you to have a look on the website of the ETF to find out more detailed information about what leads to an exclusion within that portfolio. Now then, we've also looked at the VanEck ESGI and the VanEck GRNV ETFs. Now the GRNV is exclusively focusing on Australia versus the ESGI, which focuses more on the world with I think around about a 40% US base of stocks. And they exclude the same things, and they actually follow an MSCI World SRI index. And then similarly to the SRI MSCI index, this one also excludes companies that have a lot of ESG controversies happening, as well as human controversy scores, so basically human rights violations, and then it also only includes companies with an ESG rating of A or higher, with noting that AAA is the highest and CCC is the lowest with these. And so it really has this third party component as well to look at controversies, as well as a high environmental social governance score of the business operations to be eligible to be part of this fund. And so it's got quite a rounded ESG consideration as well.
And just to let you know, so we have mentioned the ESG rating, the controversy score, the human rights score, and these basically are often part of sustainable ETFs, additional screenings basically from third-party providers. In this case, the ESG rating is basically developed to assess how companies manage environmental, social, and governance risks and opportunities, and they provide basically a grade that can then be assessed and compared across industries. And so, or across one specific industry to see how a company is performing within that industry. And they can basically look at certain factors that are most likely to have a material impact on a company's financial performance. So therefore, it also links with these other indicators like controversies and human rights violations, because if there's more of those, then likely the ESG rating will be worse, because that highlights that they are not performing well in certain aspects of their sustainability management. Then controversy scores, they assess a company's involvement in ESG-related controversies. So they can be determined by evaluating the severity, role, or status of each controversy case, which could be like a news leak of some major issue of perhaps, oil spills or something like that. And the severity is basically judged based on the nature and the scale of the impact while the role is categorized as direct or indirect with regards to the company's involvement in that particular case. And then the status also reflects whether the case is ongoing, concluded, or historically relevant, which is also important to look at the ESG cases or controversial cases that exist. And then on that basis, a company can be rated, or a fund can be rated in terms of the involvement in such problematic cases. And then there's also the Human Rights Controversy Score, which is basically used to assess companies' operations or practices associated with human rights violations or negative impacts on human rights. And they are basically used by investors to evaluate social performance and identify potential risks. So this is just a specific social screening tool additionally to look at human rights violations. If that's of more importance to some investors, that could be isn't a useful additional tool, although high controversy scores and human rights controversy scores will also lead to lower ESG scores. But these are just like an added on thing to these funds, and so therefore just interesting to understand, but they change also from one fund type to another, and therefore it's important to, if you want to be very precise about the way you invest, to look at that and see which methodology your fund uses by going into the fund fact sheets to understand exactly what you're buying there. But this is just another screening tool to help you better align your investments with your moral values.
Now next up is Vanguard's VESG ETF. Now this one uses an FTSE index that mirrors basically ideas that we've already mentioned to a large extent, basically excluding tobacco, alcohol, gambling, all weapons, as well as fossil fuels and Arctic exploration, as well as thermal coal and oil sands and so on. Also, this one follows closely the UN Global Compact principles, therefore excluding companies based on a high controversy score. What I really want you to take away from this video is that these screening criteria try to take out the bad stuff, from these portfolios, from what you could personally consider to be the bad stuff. And so what I want to help you with is through the tables that we have linked below this video, at the bottom of the course page, there is basically a list of exclusions for each of these ETF funds. And when you go about building your portfolio in context of the other videos that we've made, you can then think about, what do I personally value? Maybe I don't actually want to exclude alcohol. Maybe I love alcohol. Maybe I'm really, really against fossil fuels. Maybe I am really, for conventional weapons because I think I want to be able to defend my country, and my country should be able to defend itself, and therefore we need to invest into weapons, but maybe not the controversial weapons or something like that. Just think about it yourself and try to form an opinion based on what you believe is important, and then you can go about investing accordingly. And that's basically all I want you to get away from this. It sounds maybe a bit complex, if you're up for that and you know already this stuff more and are more advanced in this field, then I would definitely recommend, if you're interested, also to check out the individual websites of these ETFs to understand in more detail what these exclusion criteria are all about, to be able to help you make the best investment decision possible.